Barbara. Yeah, I think we might need Thor Samuel to fill in. Yeah, Thor, are you able to fill in for Dr. Mel?
Yes, I am.
Okay, great. Yeah, well, let's get it going, y'all. We got another awesome training to get into, and it's at this point it's all about the charts, right? So we on charts, and we're gonna just keep on getting into the chart more and more and more and more. And, most important thing is the more you look at the chart, the more you'll be able to read and understand what the charts are saying. So it's just a matter of just getting more chart time. That's what we're gonna be doing. So let's get into it and turn it over to Barbara. And Barbara, do your thing if you don't mind.
All right, so here is our disclaimer for Futures and Commodities One-on-One Trading Group. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means you alone are responsible for your actions in any trading or investing activities.
Thank you, Barbara. All right, at this time we're gonna go over to Mr. Thor Samuel to take us through the quizzes that we had throughout the week. Are you ready for us, Mr. Thor?
Yes, Dr. I am.
All right, over to you.
Okay, so we had 2 quizzes for the week. The first one. A downward trend is established by a series of higher highs and higher lows. Is it A, true, B, false, or C, not sure? I'll read it again. A downward trend is established by a series of higher highs and higher lows. Is this true? Is it false? Or B, is it false? Or C, not sure, sorry. Right?
False.
So is the statement true? A. Is the statement false? B. Or C, not sure?
B, false.
Who was that?
Well, it says Inga. I'm saying it is false, not B.
Okay, Inga said false. Okay,
I said it's false too.
Am said false too. All right. Anything in the chat?
I'm not seeing anything in the chart. Let me see.
There's someone that said true in the chat.
Okay. Yeah.
Right, that true.
Hold on, can you
Read it one more time,
please?
Okay. On the 4th, we had the quiz.
Yeah, pay attention, please.
A downward trend is established by a series of higher highs and higher lows. A downward trend.
A downward trend has what? Lower highs and lower lows.
Correct.
Correct. That's correct. Very good, Pam, Inga. Somebody, if you are not clear on this, is everybody clear now?
Yes.
Yes, sir.
Okay.
Yeah.
Okay. Yeah. The answer was false. And then Pam gave you the correct definition for how a downtrend is established.
Yeah.
It will be a series of lower highs and lower lows, not a series of higher highs and higher lows. Great job. Great job.
Okay.
What else we got, Thor?
Okay, the second quiz. When the market is trading down, who is winning in the market? A, no one. B, bulls. C, everyone. D, bears. E, the market. And F, not sure. So I'm going to read it again. When the market is trading down, who is winning in the market? A, no one. B, bulls. C, everyone. D, bears. E, the market. And F, not sure.
Them bears.
Say them bears.
Mhm.
Bears.
Bears.
The
Yes,
Bears.
sir. Them bears.
What Johnny B say?
The Bears.
Is there anybody think different? Anybody think no one? Anybody think the Bulls?
Anyone not sure?
Anybody, all right, anybody not sure? So what's the correct answer, Thora?
Okay, the answer is D, bears. Yeah,
There you go. When the
and that's
market is
just for the.
trading down, that
Mhm.
means that the bears are in control. Remember Johnny B talked about Bulls and the bears fighting? Basically, the sellers and the buyers are fighting. And at that particular time, that means that the sellers are winning, right, Johnny?
Absolutely.
Awesome. Great job, everybody. Thank you, Miss Thora.
You're welcome, sir.
So what we got, Barbara? We went over uptrend one week and then we had downtrend. What we looking like tonight?
Well, first off, I want to recommend everybody get Futures and Commodities 101, this manual if you have not. If you've already purchased it, please leave us a review and let people know your thoughts about the manual. It does help us. Of course, this manual was put together to teach people one of the best ways to build wealth, which is through trading futures and commodities. So if you get this, this will help you learn what you come on the call to listen to every Sunday. It's just like going to school. You went to school and you had textbooks. You know, you couldn't really necessarily learn the course without a textbook, without a book to go by. So this helps you. This represents, you know, everything that Delvin's learned from his mentor, what he's learned for, you know, 30 plus years. He's coming up on an anniversary this week. So just want to let everybody know, keep your notifications on the chat. August 15th is coming up on an anniversary. So we want to celebrate him as well for that. But this represents all his mistakes, his wins, his losses, and teaching everyone what he's learned. So we want you to get it if you have not already.
Yes.
So understanding why we're in the market of futures and commodities. We're going to learn about one very important thing, 50% retracement, and the concept of buying low and selling high. This can be found in lesson 5 and 7 in the manual Futures and Commodities 101. This is why people come into the market for this right here, 50% retracement.
Barbara, let me ask you a question. When it comes to chart, I know that when you first look at the chart, it looks like, real foreign to you. You don't know what it is you're supposed to be looking at, You keep hearing people talking about the chart talk to you. The chart is telling a story, but you're looking at the chart for the first time and you don't know what this chart is talking about. You don't see nothing. It ain't saying nothing to you. But with the style of trading that we do, the system that we use, when we look at a chart, what is the first thing we do when we go on the chart?
The first thing we do is find the 50% retracement.
We find a 50% retracement. And the 50% retracement is something, I absolutely love it. It's something that happens on the chart all of the time. If you've never seen a chart before, just know something that happens on the chart all the time is a 50% retracement. And what in the world is a 50% retracement? If you got lesson 5 and 7 already read in your manual, you kind of know what the 50% retracement is. But it's something that happens over and over and over, and we use it a lot in the style of trading that we do. So, Barbara, what is the 50% retracement?
50% retracement, we trade trends. So when it breaks out and it retraces back 50% of the move it just made previously, this is known as the 50% retracement. And it happens repeatedly in the market over and over again throughout all the markets, all the time frames, just constantly.
And it's very important to our system, right?
Yes, because this would be your
Yeah.
target, your profit that you're gonna make is based off of your 50% retracement.
Yeah, I want y'all to really understand that it's very important to the way we trade. So you want to understand the 50% retracement. We're gonna go over it tonight. Make sure we understand it because it's something that we use all the time when it comes to going on the chart. Like Barbara said, the first thing we do when we go onto a chart is we want to look and find the 50% retracement level. That's the first thing we want to do. So let's make sure we understand it and take some notes if that's what you need to do. But make sure you pay attention to the 50% retracement as we go over this, all right?
Yes.
Yes.
Barbara, you just mentioned that it's our target.
Yes, this is our target. So we're just now, we're gonna get into the formations. You have an entry, you have a stop loss, and you have a target. So the 50% is your target. This is a place in the market where you want price to go to so that you can make a profit.
So I see something happen on the chart that I've been waiting on, and I get into the market. When I get into the trade, my orders fill, I'm looking for the market to trade to this particular level right here, right?
Exactly.
Yeah. And that's why we want to understand it so well. I know we had a couple questions a few weeks ago that were talking about what will we get out, what would our target be? And it's all based on the 50% retracement level. So, Barbara, is there a way, are we gonna cover how do we determine the 50% retracement?
Yes, we are. This is our formula.
All right. John, you want to cover this? You want me to?
Would you cover it? I need to go do something. I'll be right back.
All right. So there's a formula to understanding and coming up with the 50% retracement on the chart. And I want y'all to write it down or take a screenshot, but know the formula. Yeah, you can Google it if that's what you have to do, but I want you to understand that formula for the 50% retracement is when you look at the chart, you saw that half moon we talked about over the last couple of weeks on the chart. It's going to be pointing you to the highest price on the chart. And then that same half moon is going to be directing you and showing you here's the lowest price on the chart. So we want to find the highest price on the chart, the lowest price on the chart, and we want to take those two numbers and add them together. Add the highest price and the lowest price. Take that total and divide it by 2. You say it again. We come on the chart, trying to determine where at the 50% retracement level, the formula that we need to understand and use would be, we want to find the highest price on the chart. Then we want to find the lowest price on the chart. We know bar chart helps us find it by using this little half moon. We take those two numbers, the highest price and the lowest price, add those two numbers together. Take that total and divide it by 2, and this will tell you the 50% retracement on that chart. So I know once you get skillful on bar chart and using the chart, you'll be able to, do it without using the formula. But in the beginning, you need to use this formula so you can get it down, so you can understand it. And most important thing is to know that this is our target when we get into a trade, our 50% retracement. Anything you want to add, Barbara?
No, you pretty much said it.
Okay. I know Eric talked about how much he loves the 50% retracement. When we had him on the call before, and he loves that 50% retracement so bad that sometimes that's all he trades. So it's a very powerful thing. And you, like Barbara said, over and over and over and over again. Talk to us about this, Barbara. Break it down for us.
Okay, so this is corn, December 25. We see it, the top formation, it's in a downtrend. And so if you look here, I just notated the number ones, the highest price on the chart. You see the half moon down here, the lowest price on the chart. If you take this number, which is like right at 480, and you add it to this number right here, which is about maybe 40, 407, 408, you add those two numbers together and you divide it. So if anybody have their calculator out, you do 480 plus, we'll say 407. Add that together and then divide by 2.
443.50.
443.50. Okay. So that would be your 50%, which is kind of
Is that
about,
the total or that after you divided it by 2, Pam?
did you divide it by 2?
Yes, I did. It was 887 to begin with.
Yes.
Okay.
Yes. Yeah, that's it, like 443. So if you look, it's about right here where the 50% is at. Kind of about right here at this point. So if you notice, it's in a downtrend. So did it make it 50%? Can anybody see that it made its 50%?
So we're looking for the 443 right now, right?
Yes, so 443 would kind of be right here, about right here.
Yeah, it looks like it did.
It did because it traded through it. It kept trading all the way down. So it made its 50%. So this happens repeatedly throughout the market. It just goes from one trend to the next, making 50%. This is another one. This is an uptrend. A bottom formation in an uptrend, feeder cattle, September 25. See the half moon right there? That's the highest price on the chart. That's the number one. Bar chart puts that right there so that you will know the highest price. If you look down here, there's a half moon here. This is the lowest price, is also the number one. So who can tell me the 50% for this particular chart based off of the formula you just learned?
Say that highest price was, Barbara?
The highest price is about 342, 342.
And that lower price is what?
Lowest price is about
65?
265.
474.50 is 50%.
What did you get?
474.50.
Go ahead, Pam. Go ahead.
All right. Okay. So you see how it would have what's the 50% again?
The highest plus the lowest divided by 2.
What number did you get?
474.50.
474.50.
Wait a minute, let me see. Yep. Maybe I did that right. 342 plus 265.
That's 607.
Yep. Divided by
So
2.
divide by 2.
Yeah.
So that's gonna be 3.
Sorry.
303.50.
Yeah,
Yes.
Did I get
303.50.
that?
yes.
Mm-hmm. Sorry
So
about
you're
that.
Right, all right.
looking at about right here in this area, about
303.50.
right here. So
Yes.
this is your 50%. Yeah, so you do this repeatedly. This is the first thing you do when you come to the chart. And the reason why is you have to figure out your target first. You
Question,
have to look at the trend and then figure out your target first. Yes, Mr. Johnny.
does this work on a 1, 2, 3 bottom?
This is the same formula for 1, 2, 3 top or 1, 2, 3 bottom.
That's right.
Did everybody hear that?
Okay, it's the same one, don't matter the trend. It's the same formula, even the sideways. It's the same formula. It's the same, you come up with the answer the same way, no matter the formation or the trend.
Barbara, can I just ask a question, please? I think I'm a little bit lost. I am seeing the top price, the highest price.
Mm-hmm.
I'm a little bit lost where you all which price you all looked at, because this chart goes from from left to right. The lowest price, is it more to the left you're looking at?
This is the lowest price right here. You see where my pointer is at? Let me do this right quick. Right here, you see this? This is the lowest price. This is also a number 1, but it's the lowest price right here. And this would be the highest price right here. See those half moons?
Oh, so that's where you're using. Okay.
Yeah. So you take those numbers, you add those two numbers together, and then you divide that number by 2, and it puts you somewhere in this area right here. So that's where that's how you get your 50%. And that's for any chart that you come on.
Right.
Now that YouTube.
Say that again.
I wonder, are we gonna go to bar chart?
Yes.
Barbara?
Yes, we are. We're going to bar chart after this section. Then we're gonna go to bar chart. This is understanding the flow of contracts. So I know last call, somebody had questions about that. So we want to go over this tonight and make it clear. Mr. Johnny, did you want to cover this part?
Sure. Understanding the flow of contracts. Does anybody understand what this means? If we buy to enter a contract, okay? What is a contract? A contract is an agreement between two people to where one person agrees to buy a certain amount of a commodity at a certain price to be delivered on a certain date. And the other person agrees to sell that contract of a certain commodity of a certain quantity to be delivered at a certain date. So if we buy a contract, we've got one of two options, right? One option is to take delivery because we agreed to buy that commodity to be delivered at a certain date. Does everybody understand that? All right. So if we enter a contract to sell a contract, then we're agreeing to deliver a certain amount of a commodity to be delivered at a certain date. Right? So if we buy to enter, we sell to get out. Right? I don't have that commodity. I better sell that contract, to somebody else because somebody else is going to deliver it. Right? So if I buy a contract or buy that agreement, if I sell that agreement, I'm selling it to somebody else, which takes me out of the contract.
Sell to get out of the contract.
Correct. If I buy the contract, I sell it to get out of it. If I sell a contract to start with, meaning I agree to deliver that commodity at a certain date, at this price, to get out of that contract, I have to buy it back to get out of the contract. Is that clear? The hardest part to think about this is if I sell that contract first, that means I agree to deliver that commodity to somebody. If the price goes down and I can buy that contract back cheaper, then when I buy it, it gets me out of the contract. Any questions?
Yeah,
That's
repeat that
exactly.
again, please. Repeat that again.
Say that again. All right. If I buy a contract, that means I'm agreeing to buy it. Okay. I'm going to buy from Delvin a car. But come before the time it is for him to deliver it, if I decide I can sell it to somebody and make a profit, I'm going to sell that contract to Lorenzo. And he's going to buy that contract. He's going to buy that car from Delvin. And I get the difference. Conversely, if I agreed to sell Delvin that car at a certain price, and I found I could buy it from somebody else cheaper, or excuse me, cheaper, then I would buy that car from him, and that guy would have, and Lorenzo would be responsible for delivering that car to Delvin. However, if Delvin doesn't want to be in this contract, he's going to buy it or sell it to somebody else. and he'll be out of the contract. And at the end of the show, all those contracts are either consumed or sold by the producers and the producers and the commercial guys.
So Johnny, the first scenario is basically that's the concept that everybody heard their whole life. Buy low, sell high, correct?
Correct.
And that second scenario is the one that we got to help everybody get in their head. Well, we're going to reverse the situation and sell it high and buy low. So the first one, everybody seems to understand. Buy low, sell high. The second scenario, Johnny Code, is the one where we're going to sell high and buy low. It's just the opposite of the first scenario. But that's the one that trips people up. Jamal had a question last week. He wanted to know how you going to sell something that you didn't own. So if you understood what Johnny just said, in order to get into the second scenario, you have to sell a contract first. The first scenario, you have to buy a contract first. But in the second one, you sell a contract first. What does that mean? That means I'm trading the market down. I'm going short the market, so I want to sell a contract. So if I sell at $10 and the market goes down to $2, I want to get out at $2, so I have to buy it at $2 so I can get out. And I made money from 10 down to 2, which is an $8 profit. And the other scenario is I want to get in, I want to buy at $2, and then the market trades up to $10. I want to get out of it, so I have to sell it. And that's all Johnny is doing, is explaining buy low, sell high, buy low. But we will have to spend more time on it. I know we will, but just understand we can trade in both directions. And that's first scenario was to buy low, sell high, and the second scenario was to sell high, buy low. All right. Well,
I had a question.
Barbara, you said, can we make money when the market is going down?
Yes, you can. You can make money in either direction. I know we've learned that, when numbers decrease, oh, that's bad, you're losing money. But if you're going in the same direction as price, that is you profiting. So we just want price to move. You can't make any money if price isn't moving. But whether it moves up or down, you can make money just as long as you're going in the same direction that price is going in.
So in the scenario when I said I want to get in the market, go and trade the market down, and it's that I get in at $10 and it goes down to $9. Normally we think we losing. But if you trade the market down, if you get in the market at $10 and it goes down to $9, did I make money?
Yeah, that's what I was trying to ask.
Yes, you did.
So when it goes down to $9, or even Devin, when you said it goes down to $2, you are still using that point value system, correct?
A little bit louder for me, Jamal.
When you say when you go in at 10 and it goes down to 2, you still got 8 points. It went down, so you got to use that point. You got to use the point value system, correct?
Yeah, to determine what that $8
Yeah,
represents.
that's what I wanted.
Correct.
Yeah, okay, yeah.
Yeah, but the point I wanted y'all to get was that it went down from where I got in, and in this case, I made money because it went down. If it would have went up and I was trying to trade the market down, I would have lost.
You'd have lost, yeah. Okay.
Yeah. So if I sold it at $10 to get into the market, and instead of going down to $2, if it went up to $11, did I make money?
No.
You
No, you
lost money, right?
You
Oh.
lost.
I lost $1.
Right.
Yeah, and that's the part we got to get. In order to get into a trading the market down, we have to sell first, like Johnny said. Once we understand that, it makes more sense to us when it comes to. I think we can grasp the concept of buying low. It goes up and then we sell it. But all you have to do is understand that it's just the complete opposite. When you trade it down, you sell it high, you want the market to go down. And that's how you make money to trade the market down. Y'all seen this before. Y'all seen this before in a movie that y'all watched before. They made money when the market went down. And this is what we need to understand. We can make money, like Barbara said, as long as prices are moving, we can make money in both directions. And look at it like this. I like to use this car scenario, so let me use the car scenario to help y'all if you're still not understanding. All right, so I'm looking for a Yukon. I like Yukons. Matter of fact, I like the Denali Yukon. That's the one I like. And I got a birthday coming up next month. And I want this Yukon for my birthday. I got a friend live in Texas named Johnny. He's a cattle rancher, but he also got a little side hustle going on. He sell cars too. And I go to my friend Johnny. I told him I want this Yukon. I give him all details of what kind of Yukon I want, the color, the options, all this type of thing. And I want this car next month for my birthday. We make an agreement. We go back and forth negotiating, and we decide. He sold me the car for $50,000. Now, turns out he don't actually have the color and the year I want on the lot. But since I don't want the car right now, I got, he has a little time because I want the car next month for my birthday. He has time to find the car before September. And he already sold the car to me, so he knows what I'm paying for it, $50,000. So if he wants to make money on the deal, he needs to find this Yukon for less than $50,000 so he can make a profit.
Yeah, that makes sense.
Yeah, Lorenzo, if he can't find this Yukon for less than $50,000, if he finds a Yukon and the best deal he can find is $50,000, did he make money on it? No, he just broke even on the deal.
Yeah.
He paid $50,000 and I paid him $50,000. But if he finds a deal, the Yukon I want, the color I want, and he finds this car for $45,000 and he delivers it to me next month and he paid $45,000 and I paid him $50,000, did he make money on the deal?
Yes. Yes.
He made 5,000 on it, correct?
Correct.
Correct.
He sold it to me for 50, and he only paid 45 for it. But in this scenario, remember Jamal was trying to understand how could you sell something? He sold me the car first before he even went looking for it.
He
So
sold
he
you
knew
something he
in this
didn't
case.
have.
That's right, Pam. He knew exactly what Dell was gonna pay him because he sold me the car first. In most cases, when it comes to selling cars, the car dealers they go buy the car from the auction or from the manufacturer, then they go and try to put them on the lot and try to sell it for more than what they paid for it. In this scenario, Johnny sold me the car first. Then he went hunting for the car, and he knew he had to get it for less than 45. I mean, less than 50, or he was gonna lose on the deal. So he sold it first. In this particular case, because he sold it first, when he went out and bought it for less than what he sold it for, that's how he made his profit. I hope this makes sense to everybody. But it's the same scenario.
So, Mr. Delwin, I understand when you say it like this, but I want to see it reflected on the chart itself because it making sense what you're saying, but how does it work on the chart for me to understand it on the chart?
We're gonna look at
So
we're gonna look at a real scenario
Mhm,
on the chart, okay?
Hey,
mhm.
hey, is Tanya here?
That's right. We're gonna ask Tanya if we can go over this trade if she's okay with it. I don't know if she's still here, Johnny, but we can go over the trade. So in this particular case, and I want you to pay close attention.
Mhm.
So we had someone in our group that just did an actual live trade in December Oats. All right. Her order was filled. She traded the market down. Her order was filled at 360. $3.60, where she got in the market, trading it down.
Mhm.
The market went down and she sold a contract, right? At 360. Just like we just talked about with the car. She sold one
Right.
at 360. The market went down to 336.
Mhm.
Remember, she got in at 360 and she trading it down.
Mhm.
It went down to 336. That's 24 points, 24 cents. Hope everybody with me right now.
Mm-hmm.
All right. In order to know what 24 points, 24 cents represents, you have to know the point value. When it comes to oats, every point, every cent equals $50. So when she got in at 360, trading it down, when it went from 360 to 359, what was her profit? It went down 1 point from 360 to 359. How much money did she make?
$50.
$50. Then it went down to 358. How much profit she got?
100.
$100. Well, it actually went all the way down to 336 before she got out, which is 24 points, 24 cents. What's 24 times 50?
1,200.
Nice.
That was her profit.
That was real nice.
She got in at 360, Inga. It
Right.
traded down. It traded down to 336.
Hey, let's qualify this. She sold a contract at 360.
Right.
So she sold.
She sold high.
And when it went
Right.
down 24 points, she bought that contract back and the spread was 24 points, which meant she made $1,200.
Got it.
And that is at $3.60, right?
Hope everybody understand that.
Yeah.
I do. I have a question, if it's cool.
Yes.
Okay, so the contract that she sold to get in, was it a contract that she already had, or how does that part work? To sell a contract.
So it worked the same way as the car with Johnny. Johnny
Gotcha.
didn't have the car, but he sold it to me anyway.
Gotcha.
Let me answer that. I didn't sell him the car. We entered into an agreement where I would sell him a car to be delivered at a certain date. The contract is an agreement. It's not owning the product. See the difference?
Yeah. Yeah, definitely. I get it. I get it for sure.
Okay.
So let me just say, to clarify for me, because I like my man. I don't have anything, but I can go on there and offer to sell a contract for that price, at the price it is, expecting it to go down. And then if it goes down, then I buy it back to get out of it. And that spread is what makes me the money.
That's correct.
There you go.
Well, now let me break your hearts. What happens if I agree to sell him that at 360 and the price went up to 355? Or excuse me,
then you
went
lost.
up to
Then
365.
you made a loss.
That's
That's when
correct.
you're
'Cause
losing money.
I still gotta buy that contract to get out. And I gotta buy it back at 365. So I lost 5 points.
Gotcha. So I got another question right there. Then, so that means that you would set your stop loss at a place based on the point system, what you're willing to risk as far as your portfolio is concerned. That's where you will set your stop loss at. So if you enter in as the buy down, like you said, at 360, but then it goes up to 365, your stop loss would be somewhere around that point system where it may go up just in case. Am I grasping that correctly?
Yeah,
Yep.
exactly. So the point being
Gotcha.
is, if I got 5,000 in my wallet, right? And I don't want to lose more than 10%, okay? 10 points times 50 is $500, which represents 10%. So I would set my stop loss, right, at 370.
That make a lot of sense. Now this is making sense right here, yo.
I'm hoping
So-
I'm hoping it goes down, and so I make money. But if it goes up, if I'm wrong, if as soon as it hits my stop loss, I'm out. And guess what? I only risk 10% of my portfolio, so I can do 9 more trades.
So, Mr. Johnny,
I can live
In this
to fight
particular
another
trade,
day.
y'all. Also, and I want y'all to now. I have a question for everybody. In this particular scenario, what we talking about, where she sold the contract at 360, traded the market down to 336. Her position in the market was what? Can somebody tell me what her position in the market was?
a
Sure.
seller?
She was
Seller?
short. She was
Sure.
short.
Bearish.
Yeah,
Bearish.
yeah.
Right. This is called being short the market. Very good, very good. Did you have a question, Inga?
Yes, I wanted to
Johnny?
ask, coming back to what Mr. Johnny said, where if it went up to coming at 360 and went up to 365, where he would have made a loss, where he would have put his stop loss. But can you come back? All right, so the market going up against him, he would have stopped himself from losing too much money by putting the stop loss. But what about if the markets after it reached 265 comes down again? Can he come back in and make some money on the when the market is trading down? Can he come back in and buy a contract again and still make on coming down, even if he lost when the market was trending up?
Can I answer that?
Yes. Go ahead, Don.
First of all, how much money have I put up to get into this contract?
360.
Well, you put no money up yet.
Thank you very much. I put
Oh,
no
okay.
money up. All right. I've just entered into this agreement. However, I have margin and maintenance that I have to maintain. So to answer your question, let's say I got in the market at 360, right? And I put my stop loss at 370, right? And the market went up 5 points. Okay. I'm not out of the trade, but my account will be reflected down $250. Okay. If the next day the market goes down towards my direction again, then I will either have lost less money or even made money.
You get back in the positive.
Because now the market's still going the other way. The only way that I'll get out of this out is if it comes up and hits my stop loss. Then I'm out of the market. Then I have to reconsider my whole plan. All right. But yes, I can go sell another contract if I think the market's going to continue to go down.
Right. Okay.
All right. But, I've already made a mistake here. This is why we teach the 1, 2, 3 top, 1, 2, 3 bottom formation. So if it's confirmed and we get in at the number 2, then it should keep working like we want it to. But if it doesn't, we get stopped out and we got to wait for the 1, 2, 3 to form again. Correct, Delvin?
Yeah.
Correct. That's correct. Now,
And we did say we get into the market at the number 2.
Correct. Just below the number 2.
Just below. Yes, just below. Yes.
we're gonna cover the formations, and it's gonna help even more when we cover the formations that we watch for and go over that a little more so you'll understand it better. But just know the concept of going long the market and going short the market. That's what we really talking about.
Well, I think I understand it a lot better now because I understand the long, the short, the 1, 2, 3, but I wanted to apply it to the charts for the first time and understand it, how it works, because that was a little bit puzzling as to how do I interpret it on the charts, and I think I got it. I got it a lot better tonight now. I mean, it's a stepping stone, but it's no longer French. I'm understanding now what you all mean when you say going down, what it means when the true market going down, and you have to sell and buy back going down to make your profit. So I'm understanding. I fully understand what that means now for the first time. Yeah. So that is really good. That these experts that you all was able to do this with us tonight and to make it much more clear to us. At least it is clearer to me right now.
Can I mention one other thing?
Absolutely.
The difference, let's say we're trading crypto,
Mhm.
and let's say Bitcoin goes to, I own some Bitcoin, all right? And let's say it goes to 118,000. And I sell that Bitcoin at 118. And let's say it goes back to 114. And I buy it back. All right. Can I make money or lose money?
I think you made money because you was able to buy it back at a lower cost.
In this instant, I was able to buy more Bitcoin than I had when I sold it.
Yeah.
Okay. But the difference in futures is, and this is something that we may have covered, or we will cover it in the future. The leverage that you're using is remember, we're talking, this contract is 5,000 bushels of oats, right? So you're talking significantly more than what the actual product is worth. Okay, so here, this is an agreement, but believe it or not, every one of those points represents a certain value with that entire amount of oats that you're selling or buying, because there's a lot of leverage going on here, right? So we're leveraging our money in these contracts to either make money going up or going down. If we're going up, we bought first and sold later. If we are selling, we sell first and buy back later. That's the whole concept that we're trying to get you to understand tonight.
Yeah.
And I want y'all to get excited about the fact that we can trade the market in both directions, which means there's way more opportunities in the market than you probably thought it would be. Because remember, all we want is for prices to be moving. We can trade the market up, we can trade the market down. So you have to just reprogram your mind when you've been taught and been thinking all along that whenever the market's trading down, everybody that's in the market is losing. And that's the farthest from the truth. When the market is trading down, we just had a quiz. Who's losing when the market trades down? Which animal's losing?
The bulls.
The bull.
The bull is losing. Not the bull and the bear, just the bull. So once you really realize and understand this, when the market's trading down, there's somebody that's winning. When the market's trading up, there's somebody that's winning. Everybody's not looking for the market to go in the same direction. And that's what makes it work the way it does. Half the people want prices to go up and half of the people want prices to go down. So you just want to be on the right side of the market, but you can make money in both directions. So Barbara, do we have a chart real quick that we can look at? I'm thinking cattle or OJ, but I want to look at a chart for 50% retracement real quick.
Well, we did, let's see, you want to go to live cattle?
Yeah, I'm trying to think of a good chart we can look at.
Okay.
Uh,
Guess what?
talk to me.
I was gonna say it's 7:01. That this market don't open till in the morning, right?
Right. Okay, look,
Oh,
pull up
yeah.
that OJ for me.
Okay.
Uh,
Yeah.
Oh, my goodness.
right.
Okay, Tanya, there's your there, there's your gap.
Yeah, so we look at these charts and we see so many different scenarios, so many different stories. And you be like, man, what's going on with orange juice? And then you start that chart where we just looked at with live cattle. What's going on with cattle? Cattle price was real high. And we see over here where OJ is coming down. But what's our formula? We said we go to the chart. First thing we want to look at it is find the 50% retracement. What's our highest price on the chart?
427, 428.
427, 428. Let's go 428. And what's our lowest price on the chart?
198, 197.
Okay. So we add 428 and 197. What's our total?
625.
625. Now what we need to do next?
Divided by 2,
Divided by 2.
526.5.
312.50.
What was that?
312.50.
312. Bob, where's 312 at? Okay. That's 312 right there, Bob?
Yes.
That line you just made?
Yep.
Okay, we can see that the market traded down. We look to the far left where we had our highest price and our lowest price. We had a downtrend. The market started from all the way in the corner of the chart, traded all the way down, almost to the bottom. We said a 50% retracement when the market made a move. In a lot of cases, it retraces back 50% of the move that it just made. So if you look at the chart, did the market trade back to the 50% retracement level?
No.
Doesn't look like it.
So it didn't do it, but for a while, but did it eventually do it?
Yeah.
Did prices come back to 312 at some point?
Yeah.
If we look to the right of the chart, we'll see where prices came back to 300 to 312.50, where Pam said the 50% retracement level. It took quite a while to do it. It made a couple attempts, but it didn't do it until we got all the way over to the right of the chart. But we did retrace back to 312. Now, you remember how we talked about the fact that there was multiple retracement that take place. It'll just keep doing it over and over and over. All right, so if 312, it was a 50% retracement. But if we take that uptrend where the market traded up to 312 from down at the bottom, can you put your cursor down at the bottom, Barbara? Right, over to the right. Right here, yeah. All the way back over. Right there. We just look at this little move that the market made from here up to the high of this trend. What's the low?
At 207, 208.
207.
And what's the high right there where her cursor is?
342.
342, 341.
Okay, what's the total?
341 plus, what was the other one?
49.
What's the total of that, them two numbers?
207 and 342?
548. Or I did 341 plus 207.
I
Okay.
did 30.
So I hear a lot of numbers coming out. We talking about this last trend, uptrend that's on the chart.
Mm-hmm.
So what was the lowest number again, Pam?
I said 207,
Okay, and then what was the high?
341 for a
And
total of
what's the total?
548.
How much?
The total is 548.
And then what when we divide that by two, what we have?
274.
274. Mm-hmm.
274.
274.
Yes. So that was a 50%.
See what you see right? You see how the market coming down to
Mm-hmm.
that price?
Mm-hmm.
It's almost there, right?
Almost.
If we keep retracing back 50% of the move over and over and over again, and you'll see charts where we'll have multiple 50% retracements on it. So I wanted y'all to take a look at that before we jump off. I know we kind of went over a little bit, but I think we had a lot of stuff to talk about tonight. Important stuff to talk about. And the 50% retracement is very important, especially with the way we trade. And understanding the concept of buying low, sell high, and selling high, buying low. Now, before we go, I seen some names I wasn't familiar with, so I wanted to make sure I ask this for everybody's in our Telegram group. And if you're not, I want to invite you into our Telegram group where we do the quizzes and post any type of updates or anything throughout the week. So if you're not in our Telegram group, I want to invite you in. Barbara, you can post the link in the chat. Thank you, Barbara. So Barbara just posted, look, go right here on the Zoom to the chat, and there's the link to join the Telegram group. And we want to invite everybody in who's not in the group to come join us. Is there any more questions or comments about tonight's training? Anything we went over tonight? Any questions or comments?
Okay, for stop loss, for
Uh-huh.
the stop loss automatically kicks you out of the trade, right? That's for your risk management. That's correct, right? It automatically kicks you out of the trade.
The stop loss, that's what the stop loss is for, to get us out of the trade. Stop us from losing more than we want. We risk. We want to put our stop loss where we want to get out of the trade at. That's correct.
Okay, so for trades like we just saw, like you said, a chart can have multiple 50% retracement. So that's multiple targets. So what target do we look for if it has multiple 50% retracement?
So if you get into a trade, you're gonna have one target. All right. We talking about the fact that the market will constantly retrace 50% multiple times, but when you get into a trade based on a formation that we watch for, when we go over the formation, you see that formation form on the chart. When you get in, there's going to be a 50% retracement level that you're going to use for your target. You understand that?
Yeah, I think I understand it. So you focusing on the 50% retracement for that trade only, not the other 50% retracement, because you want to focus on the one where you put the trade in on, so you know when to put your stop loss.
Okay, yeah. So, Barbara, can you share the screen again?
Yes.
All right. So in this particular case, let's say we have a 1, 2, 3 on the chart. All right. So we know what the highest price on the chart is, right?
Right there.
All right. So, Barbara, let's mark this chart up.
Okay.
Let's put a 1. Then we have our 2. We have our 3. So we see a 1, 2, 3 on the chart, and we say, "Hey, man, we got a top formation." And we look at it, the time frame of the 1, 2, 3. We like to trade. We want to get in this trade. We put our order in, Jamal. We have a top formation. That means if we're gonna get into the market, we're gonna trade it which direction?
Damn down.
Trading it down. So we have a top formation. The market went up, and now the trend is changing to a downtrend. We looking to get in the market based on the scenario we talked about tonight. And then we heard Inga say, where will we have our order placed to get in the market? All right. No one can tell me. All right.
No, on 2, I thought
I
he
said
was
the number 2.
asking, it's under 2, just under 2.
That's right. Just below the number 2. Very good. We will have our order placed to get in just below the number 2. All right. Now, back to Jamal's question about the 50% retracement. Barbara, what's the 50% retracement on the chart?
$329 is your lowest. Your highest price, let's say $387. That gives you $716. Divide that by 2, you get $358.
Right.
50%. Which is really about right here. This is your 50%.
Right there. So your 50% retracement, your target is right where your entry is. It's actually above your entry. Do you see that, Jamal?
Yes.
So would you think that it would make sense to get in the trade based on that?
Say a command.
Yeah.
Yeah.
See, this is why you find your 50% first. This is why this is
First.
the first thing you do, because in real time, if you came here and you did your 50% and you said, okay, wow, this is my 50% retracement right here, 358. And this was your first number 2, you have to see this your entry right here. It wouldn't make sense to get in this trade based off of that. The reason why is you're entering here to make this profit, but this is your loss. This is what you're risking between your 2 and 3.
Okay.
Get what I'm saying?
Yes.
So that's why the first thing you always do is
snap.
find your
I see.
50% first.
No, you wouldn't want to do that. Now I
Right.
see.
Not based off of that, but see, this also is a top formation in a downtrend. And so if I draw my trend line, you could say, well, it hadn't broke the trend line. It's still in the same trend, which is why Tanya got in, because she saw where it hasn't broke the trend line. It's confirmed a top formation, 1, 2, 3. And see, you also can make profit past your target of the 50%.
Right.
But if you were only wanting to go here, you would not get in this trade.
Right. I see why.
Right. So that's why he's saying that. That's
Actually, I
always the
see.
first thing. Because what happens when this happens in this scenario, it does it over and over again. So what you want to do is wait and use the rule of patience and wait to
So
get back
let
in
me ask
another time.
this. So not necessarily would you get in on the first two.
You don't have to get in on the first two. Any two is your entry.
Right.
So
Okay.
so
All right.
sometimes you could miss it. You could say, oh wow, I missed my entry, but you just take the next number two
Mm-hmm.
and that current number three. So this is a number three. This is another number three. This is another number two. So you can get in on any number two.
Mm-hmm.
And your stop loss is any number three. This is your first three, but would you choose this all the way from here to there as your stop
Mm-hmm.
loss? No, you need to pick the closest three that's to that
Mm-hmm.
number two
Mm-hmm. I see it. Yeah, that's
for your account,
yeah.
you know.
Yeah, I see that.
Yeah. So a lot of people miss that first entry, but the good thing about it, like Devin was saying, it repeatedly makes a 50%.
Right.
See, this is a 6 month. It's gonna make this 50% over and over again. It's
Mm-hmm.
gonna switch and be in a it's gonna break this and it's gonna go in an uptrend. It's gonna be a bottom formation.
Mm-hmm.
You got another chance over and over
Mhm.
again, 50%, 50%.
Mm-hmm. I see
Over
it.
and over again. So if you miss the first one, you wait for another entry. So
Mhm.
that's what you do, but you have to find the 50% first because you have to make your plan make sense. Why am I going to enter into this market?
Mm-hmm.
Does that make sense to everybody?
Yeah.
Yes.
Wow. Golly.
Yes, ma'am.
Yes. So that's why that's your first thing. And it's really just it's really just simple math. And we're going to get to risk management, which is the most important part. And you're going to see you're just adding and subtracting to figure out your stop loss amount, your target. And you're going to learn about the risk to reward ratio. You never want to risk more than your profit. You always want your profit, what you're willing to gain, to be higher than what you're willing to lose. And so we're going to get into all of that risk to reward and risk management.
Nice, very nice. Any more questions or comments before we wrap it up?
I just want to say it was another wonderful training. And I'm so glad to be in this class. Thank you. Thank you all.
Thank you. Yeah, this was
I second
a
that
lot
all
of
the way.
information was very important. What you say, Lorenzo?
I second that all the way. I missed the last couple of Sundays and whatnot, but that's why I keep coming back because every time I come back, I learn more and it gets clearer and clearer. And I'm about ready. Well, when I start paper trade, that's gonna be it.
There you go. There you go.
I do want to let you guys know this week, pay attention to your chat. We're going to put a survey in the chat this week, and it's going to be a review from lessons 1 through 9, what you've learned so far. It's going to be maybe about 10 or 15 questions. If you could take time and answer it, just answer it to the best of your ability. Even if you don't know the answer, just answer the question. It's going to be in the form of a survey. And we're just doing it to help you to see, what help do you need? What have you learned thus far? Because we're going to get deeper into this. And if we can know what you don't know so far, it's going to help you get caught up and learn. So please take time one day this week. The lessons will be uploaded. All the lessons will be uploaded. We got 2 lessons to upload. They're going to be uploaded. You'll be able to watch the videos and answer the quiz. Please take time. Like I said, if you don't know the answer, just put whatever answer you think it is. And it is going to help us to be able to help you better.
Yes,
Okay.
yes. Thank you. All right. Well, if we don't have any more questions or comments, we got 20 minutes over, y'all. So thank everybody for being patient with us and staying on.